If you look at our EV ramp up, we said we were going to produce 50,000 in the first half of this year, 100,000 in the second, and then cumulatively to 400,000 by middle of next year. We are still on track to do that.
And here with his reaction and thoughts, Michael Ward, auto analyst at the Benchmark Company, has a buy rating and a $60 price target on GM. Welcome, Michael. Good to have you with us. I guess my question about GM is this. It feels like a stock that is stuck in neutral and always has to me. It just sort of trades there from the high 20s to the high 30s. Maybe it nips into the, but it never breaks out, let alone get to 60.
Yeah, well, thanks for having me. First of all, it's amazing. Those are very cyclical. That's a given. And, historically, they perform very poorly in downturns, and as a result, people stay away from the stocks when you start to get into those dicey periods. I think one of the things that's really unique, and one of the reasons I have a buy rating on General Motors right now, is that we are in an automotive downturn. We're in the early stages of a recovery, not just in North America, but also in Europe and in China. And so when I look at General Motors, I look at Ford, and I look at the position of the group, they're probably in a better position today than they ever have been in the early stages of a recovery. And so now it's put up or shut up, really. And that's where we are.
So then is the read-through here that this is not just a GM-specific story, but this is going to translate to other automakers like Ford that will report later this week, too?
Yes, and I think part of the reaction on the stock today probably has to do with the upcoming union negotiations. Okay. The union contract, General Motors, Ford, Stellantis, expires in mid-September. When you look back historically, it's a 4-year agreement, and every time you come up to that expiration date, in each of the last 5 periods, the August before the September deadline, the stocks have underperformed. And so that is a headwind, and really that comes down to news headlines. The UAW needs to get out in front on the news and comes out with headlines that are looked at negatively as it relates to the auto manufacturers, and the vehicle manufacturers really can't say much. So unfortunately, at least for the next month, the stocks are probably dead water. But I think when you look longer term, this is the first time you're coming out where you don't need to restructure cost, product, or balance sheets. And the companies are spending money to accelerate growth, as Mary Barra just mentioned, on the electric vehicle side. And electric vehicles are coming. And in North America, it's probably going to be more on the pickup truck and van side, which is the strength of General Motors and Ford.
I like your subtle analysis here, Michael, and I mean it. I guess if I'm going to put it in my words, it's that GM is better positioned today because things aren't as bad as they usually are.
That's a good way to put it. That's exactly right. And one of the reasons why the stocks have been stuck in that rut is because in downturns, they perform poorly, including going bankrupt in General Motors' case.
Yeah. So the buy rating of 60, by when?
Usually it's a 12-month time horizon.
12-month time horizon. All right, Michael, thank you very much. Michael Ward of the Benchmark Company. Appreciate your time today.